Hey guys, hope you're having a good day and welcome back to the channel. Today's video is going to be on Urban Tea Incorporated. If you find this video helpful, please consider subscribing and hitting the bell notification and the thumbs up. And that's it, let's get into it. So Urban Tea is an emerging specialty tea and baked goods product, distributor, and retailer. They really have been struggling as of late. Their current share price is around 33 cents a share, and that's not too far off their 52-week low, which I believe is around 26 cents a share. So let's take a look at why they're struggling and really if there's any hope for this company. And you can see here they've had back-to-back direct offerings, and the share price has suffered greatly because of it. Charts do not lie. And current investors are really upset for a good reason. However, I will say that although they didn't get a great price, it is a way to attract new investors without adding debt to its balance sheet, and they already have a high debt to equity ratio. So in my opinion, it really is the silver lining and the only way moving forward. And so in my opinion, these direct offerings are almost like a lifeline to keep this company afloat and moving forward. So the silver lining would be, the share price has suffered, but at least they're raising cash to continue operations. So they obviously can't get money from a traditional bank because they have negative cash flows. So moving forward, they're going to have to be able to convince either venture capitalists, the general public, angel investors that their story is still good, and eventually they're going to be cash positive. And another reason why the share price of Urban Tea may be so low is that the institutional ownership is practically zero. And to me, that says that the institutions have given up on Urban Tea. Normally, for example, if the institutional ownership was, say, 30 to 40% and Urban Tea ran into trouble, they could purchase some shares and help them out. But because there is no institutional ownership, Urban Tea has to go through different ways of raising cash. So that is a problem, at least short term, and moving forward, that is definitely a concern and something to consider. And in my opinion, in order to continue their path forward, they're going to have to convince investors that their story still looks good. And the first step is creating their first store overseas in Manhattan called Mino. According to their CEO, Long Lee, this is the first milestone for their overseas operation plan. And one of the first things that he noted was that this is going to be very challenging during the virus situation. And so the store is going to have a tranquil atmosphere, and it's going to be customized, apparently, to fit the New Yorker's palate and aesthetic. And you can see here from the menu, they have the dark tea specialties, which apparently are the ancient teas from China and are rarely found in New York City. They have the coffee meets juice drinks. And I think they got some really neat drinks that can compete with the very best, including Starbucks. And so on the bullish side, it's definitely unique. You can't argue against that. It's not the same old Starbucks and Dunkin' Donuts, and it's a great location, albeit probably very expensive. So they need to be successful. And they also have food delivery, which is obviously essential in this period of time, including Uber Eats, Grubhub, and Hungry Panda. So just a few bearish points, which may not be bearish at all, depends on how you look at it. But one you probably can't dispute is that it's a very challenging time to start a business in New York City with the masks and the social distancing. However, that being said, it's definitely short term, and all they have to do is get through this initial hardships and they'll be okay. And the second point I just want to mention, it's high risk, high reward in my opinion. I'm not sure that the model really fits the New Yorker's lifestyle. Full disclosure, I'm not from New York, but I have been there several times, and it just seems to me that generally speaking, it's very fast paced. And when people are stopping for tea and coffee and salads during the day, it's quick, it's fast paced. I could be wrong, but it's high risk, high reward, because if it's something new, something different, and people do want to slow down a little bit, and finally there's a place that they can go relax for a little while and open up their laptop and spend a few hours, maybe even working, that could end up being a really good thing. So time will tell. And if you haven't noticed, Starbucks is actually running away from that model. There's more drive-ins at Starbucks, and it's more and more fast paced. So maybe Urban Tea might slide in and kind of take over that little niche of relaxing with your tea and coffee and salads and working a little bit, and it may pay off for them. So time will tell, and we'll see. And so my final thought is that this company is clearly struggling. However, at 33 cents a share, it's not a bad risk reward in my opinion. I think, the risk is that it could trickle down to bankruptcy, but if they succeed or get some institutional interest in this company, it could go up tenfold or more. So I really think that the reward is there if we're patient and assuming there's a small portion of their portfolio in this company. And that's it for this video, guys. I hope you guys found it helpful. And if you did so, please consider subscribing and hitting the thumbs up. That said, I hope you guys have a wonderful day and take care. Talk to you soon. Bye-bye, guys.